I think 2025 is the first year of institutional adoption of Bitcoin. I think of it as the first year of the gold rush. There's a 10-year period from 2025 to 2035. I refer to that as the gold rush years. By the time we get to 2035, 99% of all the Bitcoin will have been mined. The last 1% gets produced in the next 100 years. So if you want Bitcoin, you probably want to buy it in the next 10 years, because once you get to 2035, for all practical purposes, it's a capped supply, and the only way to get it is to bid up the price astronomically.
The next decade could mark the most aggressive phase of Bitcoin's growth and adoption, and missing out might mean losing the biggest wealth opportunity of our time. That's the warning from Strategy's executive chairman, Michael Saylor. He believes the period from 2025 to 2035 could be the final chance to accumulate Bitcoin before its supply effectively locks up for good. By the end of this decade, over 99% of all Bitcoin will have been mined, leaving only a tiny fraction available over the next 100 years. This makes the current window critical for anyone looking to gain meaningful exposure to Bitcoin. After this period, with supplies so scarce, the only way to buy in will likely be at dramatically higher prices. Stay tuned until the end of the video as Michael Saylor reveals the major shift that could propel Bitcoin to become the most dominant financial force of the decade.
What is Bitcoin? Bitcoin's the next wave. Today, it is the 7th largest asset in the world. And you can count them, right? Number 1 asset in the world, gold. 5,000-year head start. After that, you got the Magnificent Seven. You got NVIDIA, you got Apple, you got Microsoft, you got Amazon, you got Alphabet, you got Meta. And then just creeping in there, you've got some silver, and then you've got Saudi Aramco. But if you look at this, what you'll see is that the fastest horse in the race, the one that's actually moving up the leaderboard the fastest, is Bitcoin. 62% a year, ARR. Not for the past year, not for the past 4 years, not for the past 6 years, for the past 10, ever since it started, more than 62% a year. That's just the past 4 years, though. And it is running to the top, and it will run past all the Magnificent Seven, and it will run past gold, and I'm going to show you why in the rest of my presentation. Now, it's not just the 7th largest, right? It's the fastest growing. It is the most popular in the world, most popular asset. Bitcoin is spread across hundreds of millions of people. Probably 500 million people know what this is, and they're all very passionate about it in a way that they're not passionate about maybe Saudi Aramco or Meta stock. It's the most interesting because something is happening every minute of the day. You know, it crashed at 90,000 2 days ago. People are losing their minds. Smashed through 100,000. My phone's ringing off the hook. It's always moving. Much more interesting than these other things. It's pure digital. Something that, if you can wire $1 billion from one iPhone to another Android phone between 6 billion people in a split second, that becomes very interesting and very digital, right? You can't digitize silver, you can't digitize gold. Most of these other things are just securities. You can't even take custody of your own security. You can't trade those securities on Saturday afternoon. So Bitcoin is pure digital asset. It's useful. How useful? You can, if you need $1 billion in 5 minutes on Saturday afternoon and your life depended upon it, there's only one thing up there that will actually give it to you. Only one thing. People, you know, what's the consequence of that? Well, it's volatile, it's interesting. And lastly, it's global. You know, the Magnificent Seven stocks are really just Western. They're United States, a little bit of Western Europe. Saudi Aramco is Middle East. You don't see any Chinese companies up there, right? And so Bitcoin is very, very rare combination of things that make it interesting to billions of people around the planet. Now, what happens when I put Bitcoin on my asset allocation chart here? Well, it just punches a hole in it, right? Like when I didn't put Bitcoin up there first because you wouldn't see anything else. Everything else is relatively uninteresting against 60%. What you see up there is there's an answer, and then there's a bunch of noise. There's a signal, and there's a bunch of noise. And if we look at it, that's 60% for 4 years. And when you look at it against this chart, this makes it much simpler. You have a bunch of money.
This is how you buy and sell crypto the easy way, using eToro, one of the world's leading trading platforms. If you're new to crypto, eToro makes it super simple. Let me show you how I bought Solana in just a few taps. First, head to the search bar and type in Solana. Tap on it, then hit trade. I'm going to invest $10, that's the minimum. Now just hit buy and done. I now own Solana. Selling is just as easy. Go to portfolio, tap your Solana asset, then click close and confirm your sale. Super simple. That's how quick and beginner-friendly eToro is. But here's why I use eToro. Earn up to 4.3% interest on non-invested funds, 0% commission on stocks, and you can set up an account in just minutes if you want to start your crypto journey. Use my link in the description to sign up to eToro today and start trading.
Lockdowns come along in August of 2020. You can buy bonds, you can buy gold, you can buy real estate. All three of those don't beat the S&P index. They don't beat the hurdle rate. Gold is only half as powerful. If you capitalize your entire bank on bonds, well, you end up with Silicon Valley Bank, right? Your bank goes bankrupt. Bonds are an awful investment. The Magnificent Seven, good idea. Buy the 7 greatest companies in the world. Okay, good idea. That doubles the S&P, right? You can outperform if you just buy the good ones. And then Bitcoin. Bitcoin is, if you can't be Bezos, Musk, and Zuckerberg, and if you're not going to actually buy those stocks, how do you outperform them? Well, Bitcoin is double. Bitcoin is 4 to 5 times better than the S&P index, right? It's a pretty compelling chart. You might say, well, it's just the last 4 years. But the truth is, Bitcoin's the best asset in 11 of the past 14 years. This has been the story for 15 years now. If you look at every other asset class, well, you've got one that's up 147% a year on average since 2011. The next best is 16. And everything else is just languishing, right? There's a signal there. It's screaming at you.
Bitcoin has rapidly become the fastest moving asset in the financial world. While gold had a 5,000-year head start, Bitcoin is climbing the global ranks in real time, with hundreds of millions now using, holding, and building around it. What truly sets Bitcoin apart isn't just its performance, it's its portability, digital nature, instant liquidity, and 24/7 accessibility. Anyone with a smartphone can access it. No bank, no business, no border can compete with that. Bitcoin is emerging as the most efficient store of value on the planet, and the race is still in its early stages.
The point that I want to make here is that Bitcoin's the fastest growing alternative investment for high net worth individuals in the world. And, you know, if you think about it from first principles, it's by far the easiest. You know, it's not easy to buy buildings or buy, Paul McCartney's music rights or buy natural gas pipelines. But you can buy $20 of Bitcoin, 200, 2,000, 20 million, 200 million, 2 billion, 20 billion. And it doesn't matter how much you buy. You have the same exact property rights, the same exact asset as everybody else. This is very compelling. I say to people sometimes, you're trying to figure out what to buy to give to your kids or grandkids. Buy something that passes the Bernard Arnault test. Buy something that a person richer than you, more cultured than you, will want to buy from you in a decade, right? If the billionaires want it now, they're going to want your Bitcoin in a decade. If they want your Bitcoin in a decade, then the price is going up. It's not going down. You'll always find a willing market for it. 70 public companies right now are capitalizing on Bitcoin. In August of 2020, that number was 0, and MicroStrategy was the first. And since then, we're starting to see a viral effect. This is an economic dynamic spreading virally around the world. Why? Because public companies can issue millions or billions of dollars of securities every week, and they can do it again, over and over again. So once a public company capitalizes on Bitcoin, they don't just buy 10 million a year or 10 million a week. We went to the market and we raised $1 billion in a convertible bond 1 week. it worked out well. The next week we did it again. The next quarter we did it again. The next quarter we did it again. Last quarter we started to raise $1.5 billion, and then we decided to make it 2, and then we decided at the end of the day to make it 3. So when you're playing with public company money, the amount of capital here is orders of magnitude more than you would see with private corporations. And as each one of these flip, they go from, if the miners flip, they go from selling Bitcoin to buying it. And another example, Mara up there, they went and did a convertible bond offering 1 week for something like $800 million. They came back the next week and did another 600. I think they did $1 billion the first week and then like $800 million the next week. And so these are very, very powerful actors in this space. And every major market, this is spreading. Here's a snapshot of Bitcoin ETFs versus the commodity ETFs. What you can see, like we're looking at silver and gold and Bitcoin. So Bitcoin's the winner. Gold is the second best commodity. There really isn't a third, right? The rest are just trading vehicles. You're not going to actually hold any other commodity for any material period of time. So Bitcoin is generally just eating all the commodity ETFs. This is Bitcoin against the bond ETFs. What you can see here is, all the bonds are kind of slow, sleepy money, and Bitcoin is blowing past all of them, right? Do you want 4% return a year, or do you want 99%? There used to be a 60-40 bond portfolio, 60% equity, 40% bond. Now Bitcoin's creeping in to be 1 to 3% of those portfolios. It'll move to 5 to 10% of those portfolios. As it does, the price of Bitcoin is going to skyrocket. These are the largest ETFs in the world. And so it's ranked from the number 1 in assets, the SPY, all the way down. You see where IBIT is on this chart, from nothing crawled up on the board. But what you can also see is that with the performance of IBIT, it's pulling, and Bitcoin, they're pulling so much capital. They're going to slurp the capital out of all the other ETFs. And I don't think it's unreasonable to forecast that IBIT may very well grow to be the biggest ETF in the world within 10 years at the rate it's going right now. And the bad news for you is Bitcoin is beating your favorite hedge fund. These are the best hedge funds. We can find 4 hedge funds that could outperform the S&P in 2024. Most hedge funds underperform the S&P in 2024. But Bitcoin, of course, is crushing all of them. And the joke, of course, is, the bartender, the Uber driver, the aircraft mechanic, they're all buying Bitcoin, right? And they're totally crushing all of the masters of the universe with their PhDs in finance and all of their computers and their 18 screens and all their high-frequency trading, right? And it's a reckoning. Bitcoin is the new benchmark.
Bitcoin is now the fastest growing alternative asset among high net worth individuals, and Michael Saylor is making sure the world takes notice. As Saylor points out, Bitcoin's true strength lies in its simplicity and fairness. Whether someone invests $20 or $2 billion, they receive the exact same asset with identical right. That kind of equal access doesn't exist in traditional investments like real estate, private equity, or infrastructure, making Bitcoin uniquely attractive. Back in 2020, no public companies held Bitcoin. Today, over 70 do. MicroStrategy led the charge, raising billions through bond offerings to accumulate a massive Bitcoin position. Since then, the movement has exploded. Corporations, ETFs, and institutional investors are now allocating serious capital to Bitcoin, not as a gamble, but as a core part of their long-term strategy. That's why Saylor now calls Bitcoin the new benchmark, the standard against which other investments are measured. And for many hedge funds, Bitcoin's performance has already left them in the dust. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.